Welcome to the Female Finance Collective podcast, where we encourage women to have open and honest conversations about all things money.
I'm Jen, and I struggled for many years with debt and feeling financially overwhelmed, so I know how frustrating it can be. Now I'm passionate about helping women confidently take control of their personal finances.
And I'm Mary Lee. As a financial planner, I've had the privilege of working with hundreds of women who've transformed their financial lives. I'm excited to share my insights to help you on your financial journey.
Hey, I'm Sybil. I built my dream life traveling the world and creating financial freedom on a teacher's salary. Now I help women take charge of their money and burn brighter in life.
Let's start the money conversation. Welcome back to Female Finance Collective. We are excited to have you here today. We are going to be talking about credit score. Woo! I know that doesn't feel very exciting, but credit score can really have a big impact on a lot of things in our life, and it can save us money. If we are knowledgeable about credit score and we understand how it works, we can work to raise our score and we can ultimately save ourselves money. And we're going to talk about that today. This is not going to be some big, long, drawn out mathematical episode. Credit score is a lot easier to understand than I think it feels like. Sometimes when people talk about it and you hear all these terms and it gets a little bit overwhelming, but it's actually pretty straightforward. And there are some really simple things you can do to figure out what your score is, to raise your score if you'd like. And then that just keeps following you. As long as you know those, like these few little tips and tricks, you're going to be good to go.
Yeah, so today we're going to talk about what is your credit score, why it matters, and some tips to start building or improving your credit score. So starting at the beginning, what is a credit score? It's a 3-digit number, okay? And they run between 300 and 850. And you'll often see like words to go along with them. Exceptional would be up in the 800s. What is it? Very good.
Yeah. Excellent.
Descriptors. Yeah.
Needs improvement, those types of things. Yeah.
Yeah. And what they are is they reflect, this 3-digit number reflects your borrowing history. Okay. So what money you have borrowed. And it's calculated based on things like your payment history. Do you pay on time? Do you pay in full or do you pay the minimums? Things like that. How much credit you're using each month. Your length of your history. How long have you had bank accounts open? How long have you had credit cards open? It is flexible. We can talk about that. It's moving, I should say, not flexible. Types of credit. So what kinds of money are you borrowing? A lot on credit, a lot on lines of credit, a lot in the mortgages, car loans, types of credit, and then also new credit, like that you just opened recently. So when you opened it, but also just the most recent credit.
And what they're thinking about, like, I'm going to clarify a couple of those things. So
Okay.
when Sybil just went down the list of the 5 key factors to making up a credit score, that's exactly what they are. And sometimes when we see those, it's pretty straightforward, right? Do I pay my bills on time? That one's pretty straightforward. But there are a couple of them where I think it's a little bit like, what exactly does that mean? It's not hard, but it's a little bit confusing. So, your use of credit. What they ideally want to see is that you're using 30% or less of the credit available to you. So let's say you have $10,000 of credit available, like your credit card has a line of interest or a what is the word I want? A max credit, a max amount you can borrow.
Yes.
I'm losing the term, but the most you could put on your credit card, right, is let's say it's $5,000. And if you've used all $5,000 of that, then that tells them like, ooh, they're really in need of borrowing a lot of money. That negatively impacts your credit score. But if you're only using 30% of that, then that tells them, okay, they're pretty good at like balancing between what they've borrowed and what they're using. So they add all of that up and it's like called credit utilization. So they really want you, of all the credit you have available to you, ideally the sweet spot is 30% or less of that available credit. So if everything's maxed out, that's going to impact your score. The other one is if you're applying for credit all the time, that's when Sybil said like new credit. If you're always applying for credit cards and loans and lines of credit and borrowing money from stores, every time you apply, that does hurt your credit a little bit. This doesn't mean never open a new credit card that you think is going to serve you better. It doesn't mean don't apply for a car loan. But there are some people who are doing this all the time, like constantly trying to transfer balances and play a game with their finances when it comes to transferring and borrowing. And if you're doing that all the time, that also will really negatively impact you. So those are the two I think that are like the most almost confusing if you don't know exactly what it's referring to.
Absolutely. And so your credit score is used by lenders, right? If you're going to borrow money for a mortgage, for a car, things like that. It's used by landlords. I'm a landlord myself, and one of the things we check when we're getting new tenants is a credit score. And sometimes even employers will look at your credit score as well. So that's what it is and who it's used by.
That's right. Anytime you want to borrow money or owe someone money, like you owe your landlord money, right? You owe your rental company money. They use your credit score to determine how trustworthy you are when it comes to money. Are you going to
Right?
pay them back? What are the odds, right? Like that's kind of what the credit score is. Like, what are the odds this person's going to be trustworthy with their money, going to pay on time, and pay back any money that they borrow?
Yes, exactly. So I want to know, are they going to be able to pay rent every month? What are the odds for that, right? If you're signing a year contract, the landlord wants to know that in 1 year from now, you're still going to be able to pay that monthly rent.
That's right.
Absolutely.
If you want to buy a house, are you going to pay the mortgage lender back? If you want to buy a couch from a furniture store and they run your credit, they're like, are they going to pay us for this couch? Oh, right? That's what
Yeah,
everybody's checking. So your credit score, while I know some people think that credit score doesn't really matter, it really does impact how people perceive you as a buyer, as a manager of money.
absolutely. So basically, if you have a higher score, you have more options open to you, right? And not only more options, but more options at lower costs, right? You might get qualified for a lower interest rate, or you might get qualified for a bigger loan on a mortgage, for example. It's kind of confusing. Jen and I both are homeowners. When you go in and you start that process, it's quite overwhelming for me anyway, because I'm not sure how much we can afford or qualify for, and what's that monthly payment going to be, and how much do I want to be able to afford, and things like that. And so having a higher credit score alleviates some of that because you're going to qualify for a lower interest rate. Obviously, that's a simplification of it,
Right.
but in the grand scheme of things, that's like the biggest thing it does is it helps you qualify for more options and lower costs.
That's right. And I think, it can really save you a ton of money over time. So if you're going in to borrow to buy a car and they're like, well, your credit score is a little bit low, so I can offer you 7% interest. But if your score was higher, or this next person comes in, maybe they make the same amount of money as you, but their credit score is higher, they might get it at like 5% interest. And those 2% over the life of your loan will actually, be thousands of dollars. So it does make a difference. It does add up, even if at the time you're like 5%, 7%, that sounds they're pretty close. They're only two numbers apart. Over the life of your loan, it will actually make a huge
Big
difference.
difference.
And it's the same with anything, lines of credit that you might take on your house. Just really anytime you're borrowing money, whether it's credit card or anything like that, I was using like the furniture store example. Anytime you're borrowing money, it can impact that interest rate. And that is where you either spend more or save more based on your credit score.
Yeah, and so let's shift to how do we start building our credit score? How do we get it to improve? How do we get that three-digit number to raise up towards the 800s, right? So the number one way is to always pay on time. Any credit card, any mortgage, any loan, any kind of borrowing of money you're doing, pay that on time. So set a calendar reminder. kind of set an automation where it pays automatically, right? Ask the credit card company to adjust the date that you make your payment based on when your salary hits your bank account, right? We get paid on a certain day and it's not till 2 days later it shows up in my bank account, for example. If that's your case, but your credit card is due back there, call your company up and change that date, right? But your number one goal is to always pay all debts on time.
And your bills, even like
All
your,
bills. Yeah, you're
I
right.
mean, even like your
Electricity.
your gas company, water, all of that. They will also run your credit for those types of things.
You're right.
Cable, internet, like Spectrum will run your credit. So if you are paying on time, it will make a difference. Even though you're like, I only have one credit card and I try not to use it, paying those other bills on time will also improve and impact your credit. It's not, don't feel like it's just loan payments. It's anytime you owe someone money and you're paying it
Right.
back, that is the ticket right there. It'll help.
Yeah, for sure. And then Jen, you already talked a little bit about keeping that credit utilization under 30%. So keeping an eye on that. What is your allowed balance? And then how much are you borrowing down from that? So don't open too many credit cards at once either. We already talked about that a little bit. That can negatively affect your credit score. So try to, again, we always say here, like learn and then plan. So
Right.
if you know you need to, like we just got a new heat pump, and I know I wanted to put it on a zero balance credit card and pay it over the year instead of all in 1 month. I have a plan to do that. I opened the credit card in time, right? So that plan is going to allow me to pay zero interest, but basically break up that payment instead of having to pay it all at once. So there are really some advanced moves you can do when you have a higher credit score. So it is really important. Even if you're not going to buy a house anytime soon, right?
Right.
Even if you're not making that big purchase, it's so, so important to try to raise that credit score whenever you can.
And once it's even the best, I don't want to sound discouraging to people who have a low score and who are really down the road in life. I'm not trying to discourage you. All of these things will still help. You can raise that score from
Absolutely.
month to month by doing these small things. But also, if you're just starting out and you've never really paid attention to your credit score before and you don't have any loans and you haven't done any of that stuff, this is a great time now to start building it so that when you are ready for those things, you've like already put in the work, right? And again, the things we're saying are not hard. Like making a plan to pay things on time, not overutilizing your credit. And if you have, then maybe one of your goals is to pay it down and try to get down to that 30% so that your score will go up. But whether you're already on your way and you're like, I've kind of like negatively impacted my score, now work to build it. And if you're down at the beginning and you're like, well, I don't really need to borrow money right now, now is a perfect time to like build it high so that you will save money every time moving forward that you need to borrow money. It will be so much easier for you. Every time my husband and I both have very high credit scores, it's something I didn't always, mine was never terrible because I always paid on time, but it wasn't great. And there was a stretch where I had, I think on your credit report, they're called slow pays when you pay late. I think it pops up as a slow pay. And I had slow pays because I only got paid once a month. And so things were late and it impacted me. And I was able to like fix that. But every time we go to like buy a car, buy a house, everybody always says, ooh, you have really great credit. So that won't be a problem, right? They lead with
Yeah.
that because it's the first thing that they look at. So if you can walk in knowing confidently, and what's considered a pretty good score is between mid sixes and mid sevens. Anything higher than that is like amazing. But if your goal is to like get yourself to mid sixes or low sevens, you're going to be in pretty good shape.
Awesome. Yeah. So we want you to look up your credit score, right? Jen, can you talk to us a little bit about ways that we could do that? I just saw, yeah.
Yeah, so there are ways to check your credit score for free. So if you apply for a loan, right? I just told you that that's like a hit on your score. They will, and that's okay. It's not bad.
Yeah.
They will tell you your credit score when you apply. They'll say, here's your credit score. And that is a way. But you don't have to apply for anything to get your score. So please don't feel like, I think there was a time, I don't know if people still feel this way, when people were afraid to check their score because they thought it would count as like a hit on their credit. And it doesn't. There's free ways to check. So if you forget all of this once the podcast ends, just Google safe, free ways to check my score. But Experian is a reputable, reliable company. And also, I believe Credit Karma. I looked them up a couple days ago. Both ways that you can get your credit score for free. And they will just let you know what it is. There are 3 different companies that calculate credit scores. So you will end up with 3 different scores. They will not be the same with every company. That's okay. That's just how they are. And their number, because their calculation math, they're like, what's the word I want? Their calculations are different. Like their system is a
Their
little bit different.
percentages on those 5 factors.
Yeah, but it'll come out close and you'll be good to go and you'll be able to see where it is and then you can start setting a goal for where you want it to be.
Yep. Yeah. And so that's your task for this week. Check your credit score. Don't worry. It does move and you can do these things that we've talked about in this episode to increase your credit score. Okay. Is it calculated monthly? I don't know exactly, or but it's a moving target.
Yes, I don't know the exact thing either. I should look that up, but I do know it like changes regularly. Like you can positively and negatively impact it pretty quickly.
Yes.
So, if you find out your score, let's say you have no idea what it is and you get it back and you're like 575. All right, my next target is to get this thing over 600. Then I would like do the things we're talking about for a couple of months and then check it again. Another thing you can do really quickly is check your credit report. And a credit report is different than a credit score. And these companies can also get a report for you. And that's where you'll be able to see if anybody has borrowed money in your name or done anything that feels a little bit off, because those things can also impact. It's just a good practice to check that credit report like once a year, just to make sure there's nothing weird on there that you need to get corrected.
Absolutely. And you can get things corrected. There are processes to correct things. Okay, so thank you so much for listening. Be sure to subscribe and follow and like us, share us with your friends, comment, read the show notes, watch this episode as many times as you need to. We really appreciate you and we'll see you next week.
Thank you.